Hey everybody, it's Pete. Good morning. Welcome to today's Stock Market Live. Stock Trading Pro has a lot lined up for you today. We're going to talk about whether or not the current stock market crash of 2022 is done. We gapped down Wednesday, held the bid, gapped down on Thursday, held the bid, and now we're actually up again this morning. So 2 days in a row, the stock market opened lower on bad news. Today we actually have bank earnings coming out, and looks like Wells Fargo numbers were not good, and the stock futures are still positive. We have a ton of stuff to talk about today. We're actually going to take a look at some tech stocks that are actually finding a bid and breaking out with big volume, some after earnings, some of them are market leaders. We have a lot of stuff to talk about tonight because we're going to talk about what it looks like when the stock market crashes and starts to turn around in the other direction. I want to be clear about this, though. I am not calling a market bottom. All we're doing, which is what we do every day, hopefully you're with us every day here on the channel, is we're putting the pieces together for building an argument for should we be buyers right now, or is the more aggressive side of the market, the short sale side of the market, where we're expecting the market to go down. We got more data coming out this morning. We're going to take a look at that as well. But I want to get this clear. Some of the stuff that's going on with tech stocks right now, and let's face it, even home builder stocks right now, where tech stocks should not be going up with interest rates going up. Home builder stocks should not be going up with the way that everything is unfolding, with interest rates going up, mortgage rates going up, and inventory is changing, and nobody's selling houses the same weekend like they did. But what's more important, what you think should happen versus what's actually happening, which is going to take us into yesterday's coaching call. Every Friday, we do a deep dive review of last night's boot camp coaching call, and last night was a whopper. Last night's call was 2 hours and 20 minutes. We're going to do some sector rotation today, but more importantly, I want to take you into some of the deep dive of last night's coaching call. So we have a lot of stuff to talk about today, so stick around. I'll be back in just 1 second. Okay, so thank you so much for joining me here today, everybody. I really, really appreciate it. I want to say hello to everybody. John Oakes, good morning. How are you, pal? Al, good morning. Good morning. Love to see everybody here early. Winnie, one of my favorite people in the world, big part of our community. Brian Carr, some big wins again yesterday. Nice job holding on that trade at Boeing yesterday. That was fantastic. Tony the Tiger, how's it going, Tony? Good morning. Good morning. John, great questions on last night's coaching call. Very, very good job asking last night. And Don, always a pleasure. You know what? Let's actually dive right into the stuff that matters to everybody right now. Let's hop on over, and we're going to take a look at some of the tech stocks that we were talking about. I want to show you some ideas, give you some ideas for potential breakout trades today. But I want to, again, very, very important that to understand, you need to understand the optimal entry on some of these. And some of them have already rallied for a couple of days. So for me personally, that means if I'm looking at these tech stocks, they've already gone a little bit of what they normally do. For me, that would be a short-term trade until they pause again. So you know what we do all the time is we look for a push and a pause. So right now we're kind of halfway into that push, but I want to get right into the stocks first because I want to start right out with giving you some ideas. So this is probably the biggest one that we've been watching. Now you can see how we're working the charts where it actually broke down and broke the downtrend, quite honestly. And not only to break the downtrend, but if we start to dig a little bit deeper into this, we're actually doing it on increased volume. That's pretty interesting. So we get these questions all the time, and it's probably one of the best questions that we get is, can you help me put together the pieces of volume and price action to come up with whether or not real money is actually buying, supporting those stocks and holding them up? And Qualcomm actually right now, probably something you want to take a screenshot of because it's got really good push, heavy volume, pause, light volume, push, heavy volume. That's why I'm bringing it up today, and that's why I'm talking about it. The stock market crash is not over, but something is going on. Something is changing. We're not talking about a bottom. We're saying that there's kind of a disturbance in the force, and it's something we need to pay attention to. A lot of people are going a little batty right now who just keep thinking that the market's going to go down. We can't confuse our longer-term macroeconomic idea, inflation, interest rates going up, the Fed coming up again, and what they're going to do with what's going on right now. So the big thing with that is that it is critical as somebody trading stocks, as somebody in the stock market, or really any market for that matter, you can't fight the tape. That's why the number one thing we do is order flow and tape reading. Those two things combined are the number one foundation of making sure that you're not fighting the current price action. Now, do I think the market's going down over the next 3 to 6 months? Yeah, I do. Unless something dramatically changes. Yesterday, they were talking about the Fed maybe ripping that Band-Aid off and maybe doing a full point at the next meeting. That is a lot. That is them way overreacting on the other side instead of trying to create a soft landing, and they're trying to stop it like right away. So I do think over the long term, and when I say long term for me as an active trader, I do think we're going down over the next 3 months, 6 we'll see. But again, putting these pieces together. But here's the thing I want to get across, and we're also going to show you those home builder stocks. Right now, over the last 3 weeks, we've been rallying in these stocks, and we had that in healthcare stocks. So we're starting to see the rotation again. So I want to point out two things. First, I want to show you the charts of the breakouts and the reversals, the short-term reversals in the tech stocks. These hot tech stocks have been very tradable recently. One of my favorite stocks that I've been trading for a while, which is AMD. We're going to take a look at that as well. But then I want to show you the rotation, because yesterday's final numbers on the rotation were super interesting. So we're going to hop on over there right now. I just want to say good morning to Gabe. Gabe, how's it going? So let's first take a look at the chart of Qualcomm. So this is what I was talking about. When you start to rally on volume going up, and then you start to pause on lighter volume, that's very constructive. And then you start to go up again on heavy volume, and you can see that we're actually positive again this morning. So when you start to put those pieces together, what you really need to start saying to yourself is that every candle is not the same. You have to dig a little bit deeper into it. How much money was actually spent to create that big green candle, that big red candle? If you see a gigantic red candle and volume is actually going down, be a little suspect of the strength of that rally. But when you start to see them take off and volume is increasing, that's pretty significant. So I actually want to go over a few more charts here just to give you some ideas for actively looking at ideas today, and maybe even potentially on the next pause, looking for another swing trade. So Qualcomm definitely is one of the ones that just broke the downtrend. We probably got to get through this before I put on a new swing trade. I'd need to see it over here. So I just want to be clear about this. Qualcomm is coming up to a resistance level. It's been strong the last couple of days. So again, if you're a regular viewer of our channel, which I hope you are, do me a favor, make sure you hit subscribe if we're doing a good job. Qualcomm needs to get beyond this resistance level for my next swing trade. So I'd be looking to maybe make 1 or 2 more days up to that level, look for it to punch through that level, pause, and then the new swing trade. So that's the first part here, okay? So Qualcomm, obviously we've got to talk about this guy right here. He's now also at a level that we talked about. Remember, if you remember last week, we were talking about this one here. And you know what? This is a really important point. One of the biggest challenges that we see when people come into our community is I have all the right stocks, but as soon as I buy them, they go down. They go down, I get stopped out, and then they do exactly what I thought they were going to do. You know, raise your hand if that's happened to you. It used to happen to me a lot until I understood the optimal entry. So when we talk about Apple last week, we said we like the idea, but it's already up 5 days in a row, and it's coming up to a resistance level. So that's not the optimal entry. We call that a bullish echo. A bullish echo simply means that it's obvious for a swing trade, but it's too far for a new swing trade. So that means we could day trade it and then wait for the next swing trade entry. And I'm going to show you exactly what that looks like right here. So if you remember last week, we drew this resistance line here over here. When Apple bottomed out, we had a push, a pause, and a bottoming tail. We said, okay, this push up is going to meet some resistance up there. So the closer you get up here, the less likely you're going to get follow through. And what's kind of cool is we kind of got exactly what we were looking for. We paused, bullish U-turn, started to rally, and now we're looking to get through there again. So what is the trade in Apple right now? Well, we have 2 days of rallying in Apple. The last rally was 5 days. So we've already used 2 out of the 5 of what it normally does. Again, we don't want to put limitations on how much money you could make on a new idea, but you have to trade what the stock normally does. Plus, Apple's right at a resistance level. So this is going to end up being a 2-step trade for me personally. I want Apple to get through this resistance level, and I want to be clear about this. Today, for a swing trade, I want to see it close out of that level. So I'm going to wait till the end of the day to initiate this. For a day trade, I can absolutely trade it if it meets my minimum viable criteria for a day trade. But for a swing trade, I want it to get through that level. That's going to be half of my initial entry. I'm going to wait for the next push, the next pause, and that's when I'd add my second piece, and now we'll set the target for Apple. So what I'm looking for now is I'm looking for this to close above here. That would be my first piece. And then if we zoom out, we're going to use our handy dandy Fibonacci retracement level, and all the way up here is 50%. So we're going to want to see that a little bit deeper than just the 50. up in this area where the last place, probably around this 162 area, 162, 165. So there's probably around $15 if Apple breaks out here and takes off. Now, here's the thing. Remember, we talk about if then, right? If it breaks out and if it closes above that level, that's going to be the first piece of my trade. If it bounces from there and pauses again, I'm going to put on the second piece of my trade, and I'm going to look for that 167.50 area as my profit target. That's one side of the trade. The other side of the trade is if it breaks out, closes above that level, and I put on half of my trade, and it reverses back down, I'll simply get out, take a small loss, and then look for the next trade. We get a lot of people talking about trading is really stressful. When you map out exactly the way I just said it, and maybe you might want to go back and rewatch that part of the video, trading is not stressful at that point because you've already said, okay, A plus B plus C, and I know exactly what I'm going to do. So if trading's kind of driving you bananas right now, number one, it is a little bit of a challenging market right now, especially for buying opportunities and swing trades long, which is why I'm taking a two-step trade on that. I'm not committing full share size until I get some conviction or some feedback from the market that it's going to move in my favor. So you might want to watch that part again because that's the way to map out your trades so that there's no guesswork. You already know what you're going to do. So let's talk about some other ideas. So TSM, we already talked about Qualcomm. TSM is another one that actually had pretty good earnings, and you got a bullish gap and a bullish gap. Now, this is clearly still a longer-term move to the downside, but what's super interesting is now it broke that downtrend. So we can actually now say that we're going to end up being in a box over here between here and this mark down here. And you can see that there's a bunch of price action over here. So now what we're doing now, which is we're starting to make a list. Again, remember, if this happens, then I plan to do this. If the stock market does not go down, if the NASDAQ, specifically the QQQ or the XLK, if you want to look at them on a bigger picture, and I'll give you those right now. Normally we look at the SPY, but on the tech side of things, we're normally looking at the QQQ. So you can see that that's kind of still stuck in a box. And the XLK is another group that's still stuck in a box. But here's the thing. So now you want to set alerts. Now you want to have the number ready, right? If this happens, then I plan to do this, and I plan to look at these ideas. So if we take a look over here and we go back into the QQQ, you can clearly see what the level is. And right now it's that 295 level. So we just talked about some ideas. We want to raise our conviction level on that. So what you need to do now is set an alert in the QQQ at 295. And if it gets up to 295, you're now going to look for a breakout. So these stocks that are already strong, these hot tech stocks that are showing bullish order flow already before the group bounces, so they're showing relative strength to the group. If the group bounces and those stocks get through those resistance levels, that's where our conviction level goes up a little more, and maybe we can consider holding those a little bit longer. Is that a lot? It's just, if this happens, then I plan to do this. If the car in front of me steps on their gas, maybe I could step on my gas. If the car in front of me steps on their brake and I see their brake lights, then I'll step on my brake or I'll take my foot off the gas. It's the same thing as driving. You just need to really have these things in your head. If this happens, then I plan to do this. So what we just mapped out here, using first those strong tech stocks, which is showing relative strength, then we went into the individual sector, whether it's the QQQ or the XLK. We basically said, if this breaks out and takes out this level, then we'll have more conviction in this one, in this one, in this one, and AMD and Micron are also starting to show a little bit of bid. So look at the way that these came off the bottom after earnings, and now they're showing a little bit of strength. And this is actually all the price action since earnings. So what we just did there is we actually mapped out some if-then scenarios that if the market should happen to turn around. Now we need the other side of the market as well. We need the other side of the market to say, okay, that's what we're looking at, and we found stocks with relative strength. Now you want to screenshot this because we're going to walk over to some other ideas that are not necessarily tech stocks that are going to be in my game plan for today and the current and the coming week. So this is a part of the research from last night. Okay. So let's actually go over here. So what's super interesting now about the rotation, you can see how we started out. This was coming into Monday. The prior week was pretty strong. So we're starting to see signs, and technology was at the top of that list, right? Signs of the market recovering. The month was still not looking that good. Technology worked its way up to the top of that list, still in the top three. The day wasn't that awesome. We started to see some chinks in the armor, massive green to that. By the way, this was something I'm going to show you in a second that we talked about on last night's coaching call, which is how do you use the market to have conviction in your ideas, even if you're only just trading one idea. And that really comes down to understanding how to have your software set up. And I'm going to show you that in a second. Okay. And the sector rotation. That's a big thing because we're starting to see, okay, it's good. It's good. Oh, it's starting to weaken a little bit. It's starting to change. You need to do this on a daily basis. And again, it doesn't matter if you're holding a trade for an hour, if you're holding a trade for a month or longer, you still need to really say to yourself at the bottom of that stock market power pyramid where we have the most conviction, what is the market doing? Then you go up one layer. Well, first of all, what is the market doing? And get an answer. Is it rallying? Is it declining? Is it sideways? Get an answer because that's going to mean something. Then you go up one level, which is what we have here, which is the sector rotation. Now you start to go up. Market right now, if we go into the market, it is bearish to neutral, right? So bearish to neutral, it's still kind of stuck in this window. So if on a scale of like 1 to 10 being, yeah, it's aggressive and it's confident and really obvious, right now it's bearish to sideways, and we have this big sideways price action here. So right now that's neutral at best. So right now, there's really not a big bullish edge to the market. It's more short-term in the green candlesticks that we've been seeing. And you can see here, gap down and rally, gap down and rally. And look at the notes here, the individual candlesticks and how many green there are. So if we start at the bottom and we say, what is the market doing? And we also just showed you the QQQ. I just want to show that again real quick, that right there, it's actually still sideways. So do we have an edge based on the market right now to be a buyer with conviction? The answer is no. It's still sideways to down. So that means that we're trading the short-term conviction. So now we go up a layer, which means that layer now is we're looking at the sector rotation. Sector rotation started the week out strong, started to get a little bit weaker where some of the sectors, and again, real estate rallying is a little confusing right now, but you can't fight it. Energy is still showing some weakness. So we went from a bunch of sectors to a couple of sectors to no sectors over the last 5 days, and we still stayed weak here. Healthcare was trying to hang on to the strength that it had earlier in the week, right? Then we go into yesterday, and hardly anything was strong. So what does that mean for yesterday's conviction? Again, this is just building that argument for when I go into the day, when I go into the week, what is the bias that I have right now? And when I say bias, it basically means, do I think we're going up or down right now to have conviction in the ideas that I'm about to buy or short sell if you're an active trader who understands the other side of the market? So going into yesterday, very light conviction, if anything, maybe even bearish if you take a look at this picture, right? So that was going into yesterday. So what does that mean? How does that affect your trading if the big picture is not clear, if it's a little bit fuzzy? So remember we talked before about driving. So kind of right now in the market and in the big picture, and we're going to get into the coaching questions in a second, is right now a lot of people are seeing it's choppy, they're getting chopped up, maybe a whole bunch of small losses. So when we recognize this, and this is really important, and I really hope you watch this part of the video again, when we recognize these are the kind of conditions, this is kind of like stop and go traffic where there's really not a step on the gas moment. So what does that mean? How does that translate into your aggressiveness? How does that translate into position size? Do you want 1,000 shares or do you want 200 shares? Do you build a position or do you go all in? Do you take quick profits as it moves in your favor? Or when it pushes up and pauses, do you get out because of these conditions? Or when it pushes up and pauses, do you look to add and look for a bigger move? So let's just have a visual of this, right? So now we're going to actually move it back to at the beginning of the week. This condition going into Monday was pretty darn good, and there was a lot more. Now, this condition going into yesterday, no. So what does that mean? That means that we dropped to lower time frames, found the most recent order flow that we had conviction in that had volume, like I just showed you before, and we were trading a little bit shorter time frame for cash flow, getting out, and then looking for the next trade. Now, I can hear you thinking, like, what if I'm not somebody who's trading on those short time frames? Well, that same screen is giving you clues. It's telling you right now that if you want to accept risk and you're looking to be a buyer of stocks, the picture right now is stop and go traffic. So that means that you just need to say, okay, I'm not seeing what I want to see, so I'm going to be patient, step aside until that picture tells me what I want. That's real trading. The challenge, and I'm going to show you the coaching call in a second, the challenge is when traders know what they want to see, game plan what they want to see, don't see it, and trade anyway. When you could eliminate those trades that do not match what you want, that's where you immediately start to elevate yourself as a trader, because now you're not throwing money away simply because you need to trade. You're now a money manager. You hired yourself. You're a money manager. And now you're saying, okay, I'm only going to take risk. I'm only going to accept risk and only look for profits when there's a pretty good chance the market's telling me it's going in that direction. So if you're finding right now, and let's go back to the market for a second. If you're finding right now here that the market's choppy, if you're finding here right now that the market's choppy, you know what? That's a signal. You just have to pay attention to it. So if you're swing trading or position trading or hanging on a little bit longer and the market's not clear to you, that's where you just got to either step aside and say it's not clear, I want the market behind my back, or then I got to go and find some individual opportunities like I just gave you in the tech stocks, which are pretty interesting. So now we're going to work our way again. I'm going to give you a heads up. You definitely want to screenshot this. Okay. We're going to work our way over into, obviously we got more economic data coming out today. Make sure that you're aware of that. We also have Wells Fargo that had earnings today and not good. So let's take a quick look at that. So we got Wells Fargo today. And you can see it's actually, it's not really down that much, only down 39 cents. So again, 39 cents, not horrible. Let us read the tape. So when the market, it's down pre-market right now. So was yesterday. So was the day before. Both days, the market was really bad pre-market, and then we rallied. Yesterday, bad pre-market, and we rallied. So let's pay attention today. So when the market opens today, pay attention to that opening price, not the change from yesterday. If you're day trading especially, you're looking for this. You're looking for where it opened today, and are we above that or below that? This is where the challenge is. Market's bad. We're going down. I'm going to sell stock short. I'm going to stay away. But if today it's slowly drifting up, do not fight it. And I'm going to show you another group of stocks that's doing that same thing, which is the home builder stocks. We keep talking about these guys, and you're reading all the bad news, right? We can actually go over to, I'm sure CNBC has something on here about earnings, mortgage rates, and that kind of stuff. Somewhere in here, I saw the article before about mortgages. I forgot where it was. But if you're taking a look at these stocks, a push and a pause, a push and a pause, a gigantic reversal. We got a little bit of resistance coming up in here, but the bottom line is these stocks should not be going higher. So again, what should happen versus what is happening. You need structure to tell you, okay, not yet, not yet. As long as you see those pushes and pauses and you start to see those green candles again, don't fight it. Join it until you see it change. We did a presentation yesterday, and one of the biggest challenges is that there's 3 steps. There's which stocks to buy, when to buy them, which we're talking about now, which is the optimal entry, and how do you know when it changed? And what we're talking about right now is how do we know when it changed? So again, we're getting into another group of stocks that are going up that technically shouldn't be with all the negative headlines. And by the way, we're actually going to talk about a stock that was such a picture perfect version of buy the rumor, sell the news. It was just, I don't know if you could possibly get a better picture of it. We're going to take a look at that in a second. So I want to give you some more ideas for today for these stocks that have been bouncing. So Lennar, KBH, right? This is now coming off the bottom. You got to push and a pause, a push. It's got to get through this resistance level. Obviously not going to do anything until it breaks through this wall of buyers here. And even Pulte Homes. You got to push and a pause, a push, and you got this resistance level here. So now, does that mean I'm just going out and buying these stocks? No, that's what the game plan's for. You have your sheet from day to day, week to week. Probably, you got a notebook, a hard-covered notebook that you keep every day. Which, by the way, that's very important. These are lists of stocks that are rallying while the market is still bearish to neutral. So you got to make note of that. If the market should happen, what if the bottom has a short-term move? What if the Fed next week says, you know what? We're not going to raise it by a point. We're not even going to raise by 3/4 of a point. We think we're doing okay right now. We're going to raise it by 1/2 point. The market is going to be screaming to the upside if that happens. So you need to be ahead of that and say, okay, which stocks are strong right now before the market rallies? Again, if this happens, then what do I plan to do? So which stocks should be the most negatively affected by higher interest rates? Tech stocks and real estate, right? But what if the Fed next meeting says, well, we're not going to go crazy and we're going to raise it reasonably? Which stocks will be the most positively affected by them not raising as much as everybody expects? Tech stocks and real estate. So do you think it's a coincidence that those stocks are starting to drift higher right now into the next Fed meeting? It's not a coincidence. It's things we need to pay attention to. And again, these are the kind of things that we can get all dorky about and talk about all day. Obviously, we do that in our community. These are the things that make trading fun because we're not guessing, we're not predicting. We're basically saying, if this happens, then I plan to do this. If this happens, then I plan to do this. That's where trading, your stress level drops dramatically. And now you're just like, oh no, on page 2, it says that's what I'm supposed to do. Look, I hope that you continue to watch these YouTube videos. I'd love to see you in my community. But the biggest thing I want to get across to you is I hope that you're learning from my experience and you're writing this stuff down, that trading can probably be a lot less stressful than you're making it right now. You're probably trading when there's nothing to do. And that's stressful. You probably don't have a structure if it's stressful right now. You don't know what perfect looks like. And the last part is the easy part, which is understanding how to hang on to your winning trades when it is obvious. So this is kind of cool putting the pieces together. All right. All right. So let's actually head over. I want to now go over into two things I wanted you to take a snapshot of. The first part is the list of stocks that I have in my game plan today. And the second part is then we're going to get into the coaching call ideas from last night, the questions, because again, every Friday we show you the coaching sessions, and I want to elevate you to spend the weekend thinking about how can I fix that. So the big thing when I do my coaching sessions, like I said, last night was 2 hours and 20 minutes, almost 2.5 hours. I come to everybody to say, what is holding you back? I want to give you customized help based on your unique experience, your resources, your goals, your challenges, all of those kind of things. And I'm going to show you that. So I'm going to challenge you now for the next couple of days over the weekend. I'm going to show you the whole thing. You'll see some of the questions that people ask. Ask yourself, what's holding you back right now and how do you fix it? Okay. So again, let's head on over here and you can take a screenshot of some of the ideas today. So these are the longs and these are the shorts. So you get an idea. We got some consumer cyclical stocks. Oh, that's actually a couple of stocks I wanted to talk about today, which is Costco. Again, breaking out, finally got through this level. If you remember last week, we actually were watching this break of the downtrend, and we'll actually map that out for you. We actually were watching the break of the downtrend, and we said, as long as we break this downtrend, then we end up forming a box, and we were kind of dancing right around there. Now, this is what's kind of interesting. A lot of people come in and say, I missed the entry, right? Okay, that's fine. But if you knew about it and now you're aware that that stock is following through, you need to be cycling through your list on your keyboard or setting alerts and saying, I can't miss the next one if I miss that one. It's your responsibility to have that stuff set and say, okay, if it gets to that price. So Costco broke out, but I missed the entry. Okay, great. Look for the next one. And Costco gave you a perfect entry, which was it pulled right back to that where it broke out from. So we take a look at that right here. Okay. Boom, 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 boom. Like couldn't get through that. Broke out. All right. I missed the entry. Pulled back right to where it broke out and took off again. And now it's up another $6. Again, is this complicated? No. You just need to have a process in place, a system that helps you find these ideas first and then create a game plan for how to trade them. So I want to make sure I called these out for you. So it was Costco, Walmart, which is starting to come off the mat a little bit as well. It's still in this box. Let's be clear about that. We need to set an alert here in Walmart. It's got to get out of this box. Pepsi has been pretty strong. Again, you can see a push and a pause. Not the prettiest charts, but you can see how hard we've been working. Let me get these guys off the screen. So Pepsi, we're really looking for a breakout up here. And the last one we wanted to talk about in this group, what the heck was the other one? Walmart, Pepsi, Costco. Oh, McDonald's. Remember, if you remember last week, we were looking for a close over 255 in McDonald's, and you can see it still hasn't closed there. Now it's actually pausing again right in front of the breakout level, and we're looking for it to get above 255. So what do all of those stocks have in common that we just talked about? Those are stocks that you might call consumer defensive, consumer staples, whichever name you like to give that. So that sector of stocks, so let's actually go back over to the sector rotation sheet. That sector of stocks is here. It's not coincidence that those stocks are at the top of the list. Number 4 and work their way all over to number 1 and the strongest for the week. So now we're actually following the money instead of guessing. Now we're going to work our way over into last night's coaching call. I want you to take a screenshot of this because I want you to have an idea of some of the things that we talked about last night. So again, you can see this was last night's call. These are all the things that we talked about. So I just want to highlight some of these things so you have some ideas of what to think about. This is probably one of the bigger ones from last night is focusing on the month, not on each trade. So raise your hand if individual trades drive you crazy. That trade made money. That trade lost money. Stop doing that. I can't say this any more clearly. We are trading for the month. We're trading to get return, maybe even over the year. Each trade is just a part of our strategy. Some trades will make money. Some trades won't make money. The trades that don't make money, those are paying the expenses. We just kick them out. The trades that do make money is your responsibility to understand how to hold those winners longer. So take that stress off of made money, lost money, made money, lost money. It'll drive you bananas. That's where I got all this gray hair from until I stopped learning how to do that. So that's the first thing from last night's call. I want to talk about confidence a little bit. So again, you want to take a screenshot of this stuff right here. This is actually an important point here, curating and building your list of stocks. So if we go back over to that spreadsheet, and again, you can take a screenshot of this right now, and I want to go right over there and over to here. So this list of stocks over here, we got the Dow, the NASDAQ, and the SPY, and you can see all the stocks that are in there. One of the easiest ways to learn how to be a trader is to start curating and building a list of stocks that you trade every day, no matter what. It doesn't matter if it's a day trade or a swing trade. Learn that list of stocks. So let's say you pick 5 stocks from the NASDAQ, the Dow, and the S&P. And very easy to do. Go into Yahoo Finance, type in SPY, and look up those stocks, right? Pick 3 of them, pick 5 of them. I'd actually recommend picking somewhere between 5 and 10 and watch them every day. Watch them every week. Figure out which stocks are the easiest for you to trade because the volatility is okay. Start trading them. Let's say you have 5, right? And you figure out after trading those 5 stocks for about a week and a half, wow, 3 of them are really easy. 2 of them, they're an absolute mess, and I can't get rid of those 2, put 2 new back in, and now you have a new list of 5. As time goes on, you have that list becomes 5, it becomes 7, it becomes 10. All of a sudden, that list of stocks becomes your go-to list of stocks. They become your ATM, so to speak, where you're making money in those stocks on a reliable basis because you know them, you know their personalities, you know how to trade them. But here's the big thing, and I want to screenshot this again one more time, okay? And then we're going to go right down to the bottom of the list because I want you to take a snapshot. These are market stocks, okay? Most of the professional traders that I know trade market stocks. They trade the market leaders because once you learn how to read the market, it's easier to trade stocks that move with the market because you're good at interpreting what's going on in the big picture. Now, we get a lot of questions. People say, why can't I just trade the market? Well, you can. You can trade the ETFs. But by their very definition, those ETFs are diversified. So if you're trading stocks, you will get much bigger percentage gains in the stocks than you would from just trading the individual ETFs. You could read the ETFs to determine which stocks, but the stocks will give you more bang for the buck. And I actually want to remember, I want you to screenshot this because these are the questions from last night's coaching call. And we go down to the bottom of the list here. Again, I'll go a little bit slower, or maybe you can come back and watch the video. I want to go down to the bottom because actually, this one's a big one here too. How to recognize when not to trade while it's happening. We just talked about that between the market, the sectors, and having conviction. We just talked about that with the SPY and how the SPY is still kind of consolidating in this window. And you can see that right there. So it's pretty obvious that there's no bigger picture edge. So that means you got to start going a little bit more stock specific. But this is the last part that I want to talk about down here. Why trading stocks less than $15 is a tough way to see consistent results. Get a lot of people come into the community. Sometimes you have small accounts. Nothing wrong with that. Everybody starts out with a small account at some point. Trading stocks that are very inexpensive on a regular basis, whether it's a day trader, a swing trader, or going back to what I just said about that go-to list of stocks, those stocks on a regular day in, day out, week in and week out basis very rarely will have consistent volatility, consistent volume. So those lower price stocks are lower price for a reason. Somebody doesn't believe that today's cash flows are worth more in the future. Sometimes they have spikes. We've seen stocks go from $10 to 20 and then back to 10. And you're like, wow, I could have traded that. And yeah, you could have. But we want to make money regularly. We want to make money predictably. And the market stocks, the stocks that are the leaders in each of those individual groups. So again, if you go over here and you take a look at the sector stocks, these are the leading stocks in the basic materials one. So when the basic materials sector moves and when the basic material groups of stocks move, they are easier to trade. So they've been in bearish momentum recently. So I just want to give you this final piece of coaching to think about for the weekend. And I'll put this up on the screen one more time for you so you can actually snapshot this. I'll go through slow so you can think about all the ideas that we had. Think about which stocks you're trading. And I'm going to say this in a way that, again, this is for educational purposes, but I'm going to say this. Think about which stocks you're trading and which of them are easy to trade and which ones are hard to trade. My gosh, stop trading the ones that are hard and make a bigger list of the ones that are easy. My gosh, so many people make trading. I can't trade that stock. It owes me money. No, it doesn't. Stop trading it and make that list. Start out with 3 stocks and trade them. Start out with 5 stocks and trade them. Get rid of the 2 that you can't read, add 2 more, and then start to build that list up. Because what ends up happening is, let's say you get a list of 10 stocks. All of them are not going to be perfectly in play every day. But if you learn how to trade those 10 stocks and set your software up properly, every day and every week, there should be something for you to do in that list of stocks that you know. And if you don't believe me, that's how a lot of hedge funds are built. They're tech hedge funds. They're long, short, like they are specific to doing something clear. And they raise money. They're like, no, we're trading tech stocks, or we're trading home builder stocks, or we're trading, financial stocks, whatever that happens to be. So financial stocks, by the way, with earnings yesterday and today, I'm going to be trading them pretty actively today and the next 2 weeks. So think about that. Hopefully some ideas to inspire you to think about how you want to build out your watch list, because trading is a lot easier than most people make it. You just first need to know what you're looking for and then find stocks that match what you're looking for. It becomes more stressful when you don't know what you're looking for and you trade anyway, or you do know what you're looking for, you don't see it and you trade anyway. So to bring that all together, know what you're looking for, only trade those stocks, and have conviction in those ideas and pass on the other ones. So I'm going to pull up the coaching questions from last night again, so you can actually take a look at these. I'll start at the top. You can pause this if you want to watch the video again. We'll just run through them. You can take screenshots if you want. You can actually go back through there again. Fear of missing out has been a big conversation that we've been having lately. So is confidence and all that kind of stuff. So if you could please do me a favor, if we provided some value for you today, if you could please do me a favor, I really appreciate that you're watching this video. If you could do me a favor, click to subscribe if you haven't done it already, because we always come out with new updates. And if I gave you some value today as well, please do me a favor and hit that like button. If you have any follow-up questions to anything we talked about today, or you want to share some ideas that you're trading, leave those comments below the video. I'd really, really appreciate it. We talked about all that stuff I just showed you is all the stuff that we do in the boot camp. If you want to learn about the boot camp, just find out what it's about. There's a link below in the video as well for that too. So I'd love to see you on the other side. Have an awesome day of trading. We're going to get some more volatility with some new economic data coming out at 8:30. And there's some swing trades and consumer staples that we just talked about. Home builder stocks are catching a little bit of a bid, and some of those tech stocks are showing some momentum right now as well. So have an awesome day, everybody. Thank you so much for being here with me. I really appreciate it. And if you have any questions, definitely leave a comment below. I will speak to you soon. Take care now. Thank you so much.